Welcome to the Daily Insights That Matter. Now, over the past few days, screenshots comparing the prices of food on various delivery apps to that on ONDC have been doing the rounds. So, what exactly is ONDC and why has its arrival triggered a price war? Let's find out. Now, developed by the Government of India, ONDC, or the Open Network for Digital Commerce, allows customers to order food, buy clothes, book cabs, buy movie tickets, and buy groceries and electronics in just one click. Now, unlike Amazon, which is an aggregator of products and customers, ONDC is an aggregator of all products and services, and all of this would be included in just one platform. Now, ONDC is, mind you, not an app or service, but a platform designed and developed by the government. Now, this service helps to connect or digitalize businesses, small or big, with the customers. Currently, there are partners like Paytm, Meesho, Magicpin, MyStore, Craftsvilla, and Spice Money, which act as the online storefronts, allowing users to order food or any other product from a business listed on the ONDC platform. Now, ONDC first became accessible to users after it went beta live in September 2022 here in Bangalore. Since then, it has expanded and is now available in 240 cities in India, with 8 cities having more than 3 sellers in about 70% of the pin codes. Now, we had discussed about ONDC first in our DITM episode dated the 20th of July 2022, where we had spoken about the technology and how it would be a game changer in the e-commerce space. We urge you to take a look at that episode as well once again for a quick recap. Now, prices on brands such as McDonald's, Taco Bell, Behrooz Biryani, Wow Momos, Pizza Hut, and Cafe Coffee Day are available at 30 to 80% discounts on the ONDC's ordering platforms compared to their prices on other food delivery apps. We're now at a juncture where ONDC could turn out to be the biggest disruptor in the food delivery space if it sustains aggressive pricing and profitability. So what is making ONDC so attractive? The first is the lower commission costs. Currently, ONDC is charging a commission fee which is lower than 50% as compared to the existing food delivery players in the market. While we are witnessing a short-term discount war, its sustainability in the long run at similar commission levels needs to be seen. Second is the enhanced data privacy and control. ONDC's decentralized approach to data management empowers restaurants and customers with greater control over their data. Unlike the existing food delivery platforms who retain exclusive access to the customer data, ONDC's open source platform allows businesses to maintain ownership of their data. This increased transparency and control is encouraging more restaurants to join the ONDC platform. Third is the government support. Backed by the Indian government, it aims to create a unified, standardized e-commerce platform that simplifies digital transactions for businesses and consumers alike. By streamlining the processes and reducing entry barriers, ONDC will enable smaller players to compete with the established giants. Additionally, the government support for ONDC also signals a potential shift in the regulatory policies, which will further challenge the stronghold of the existing players in the market. Now, the Reserve Bank of India is expected to pay out a huge sum in dividends to the central government this year. Now, this will fall again is a result of the RBI's surplus money. Now, the RBI generates a surplus after covering its expenses such as printing currency notes and accounting for any investment losses. Now, this surplus is then passed on to the central government in the form of dividends, which can be quite substantial. Now, take a look at this chart to understand the significance. The surplus acts as a crucial source of the funds for the government. Now, the government has estimated receiving a total dividend of 48,000 crores in FY24 from the RBI and public sector banks. However, according to a recent report by IDFC First Bank, the RBI dividend alone could range from 70,000 crores to 80,000 crore rupees. Now, the RBI's massive profits in foreign currency trading and lending to local banks have contributed to this windfall gains. Now, the government's tax revenue collection could face some risk due to slower than expected nominal GDP growth. But this better than anticipated RBI dividend will likely help balance the scales. It looks like the government is in for a big payday from the RBI. So what does all of this news mean for you? ONDC's lower commission rates, enhanced data privacy, and government support are poised to disrupt the food delivery market. While all of this is a positive, for ONDC to make a long-term real difference for restaurants, it could be crucial to enable expansion to new users, sustain the current profitability, and rationalize the commissions. This will therefore have a neutral indirect impact on you for time being. Now, it is a possibility that the dividend payout will surpass the budgeted estimates, and this will increase the revenue and enable the government to manage the fiscal deficit better. This will therefore have an indirect positive impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.